Hello everyone, and welcome to today's presentation where I'll reveal that by adding this simple technique you will greatly improve your candlestick trading consistency. In fact, I'd like to start off just by showing you an older chart, but as a perfect example as to how this works. Does this look familiar to anyone? As we look at this older chart of CVX here, as we see we are met with a very bullish candlestick pattern formation. Now this is where most people would jump in and buy, but as often happens, this is the case. Does this look familiar to anyone? Well, in today's presentation, I will reveal a simple but powerful technique that will really increase your odds for consistency when trading with candlesticks. And at the very same time, whereas this trade would have kept you out of this scenario entirely and might have even gotten you short at the same time. So I'd like to welcome you all to today's presentation. My name is Primo. I am the president and founder of Specialist Trading. And for those of you who are still unfamiliar with our website, who haven't attended any of my presentations before, we are first and foremost, our main goal is simply to educate traders. Even though we provide all of our students and our members with strategies and signals based off those strategies, we are really more interested in teaching you how to apply these strategies to your own trading so that you don't have to rely on us to tell you where to buy, where to sell, what markets to trade, what's the perfect time frame. Because it's our opinion that the reason why most traders fail, upwards of 80 or even 90%, is because you're relying on someone or something to tell you what to do. I mean, just think of it. How many times do you attend a chat room, or do you look at someone on TV, or do you wait for some news announcement to come out to tell you what or how to trade? This is the reason, in my opinion, after trading for so long, that most traders fail. You're really basically saying, I don't know what to do, tell me what to do. So what we do at Specialist Trading is we provide you and we instruct you all the information that has stood the test of time so that you can ultimately make your own trading decisions. Now, the reason I feel I'm qualified for this is because I've been trading for just about 40 years now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. If you're not familiar with what a specialist is or what they used to do, because they're not a lot around anymore, a specialist were those traders that were behind those large wooden podiums. If you ever look at the pictures of the old floor, the stock exchange floor, and if you wanted to purchase or sell a particular equity or issue, you had to go to the trader who made a market in that equity or who specialized in that equity. That's what a specialist was or did. I was a specialist for 9 years. Once again, I traded through the crash of 1987 and the bull market that followed. I left the floor in the mid to late 90s to manage money, to pursue my own trading, and about 7 or 8 years ago I teamed up with Pro Trader Strategies. They're my sister site. They promote and market all of my courses, and we put together Specialist Trading. So this is what we do. We teach and mentor all of our students the same tips and techniques that I've accumulated in my nearly 40-year career, and the same tips and techniques that I currently use in my own personal trading. Okay, now I'm going to show you this great technique to add to your candlestick trading, but before we do, we are required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results, a lot of chart examples in virtually all markets and time frames using this technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Once again, we are required to show you this, and as you're taking a brief moment to view our disclaimer, if you haven't done so already, I would like to invite each and every one of you to follow us on Twitter. You may want to write down our handle right here. It's an abbreviation for Specialist Trading. It's at SPCLSTTRADG. I post free information on a daily basis, anywhere from daily financial wisdom to actual signals that our strategies have generated, and signals in virtually all markets, not just stocks, but also in the Forex currency pairs as well as the E-mini futures. In fact, yesterday I posted a really nice buy signal that one of our strategies generated for all you Forex traders in the Australian dollar currency pair. And if you look at that now, if you're a trader there, if you know how to follow it, you'll see that it's up roughly about 100 pips since we generated that signal and since we notified all of our members. So we also will notify you for E-mini future signals as well as stock signals as well. We'll show you some of our current signals, but remember they are a little behind the fact, and the information is rather limited because of the way Twitter is set up. So if you'd like more detailed information, my sister site, Pro Trader Strategies, has put together a Facebook page, and there's a lot more detailed information there on Facebook. A lot of videos, educational videos, as well as more information about myself and what we do. So as you see, there's lots of ways to get more information, free information, to see what we do and how we teach and how we trade. Now, as I stated before we begin, even though we provide all of our students with strategies, upwards of 10 strategies, and our strategies are traded virtually in over 100 countries around the world by people that just started trading in the last couple of weeks to hedge fund managers. Everyone gets the same rules, the same basic format. But it's not our goal to tell you how to trade, to have a system for you that tells you what to buy, what to sell, what the perfect market the time frame is. We don't really believe in that. Our main goal is simply to teach you so that ultimately you will not have to rely on anyone or anything anymore. Remember, that is, in my opinion, the reason why most traders fail. And I'm saying this from firsthand experience because this is the way I used to trade. I used to rely on every bit of news announcement that came out. I looked at tons of indicators, maybe 10 or 20 were on my screen. We didn't have chat rooms or trading rooms back then, but what we had were newsletters and subscriptions, and I subscribed to each and every one of them. And so all of my trading was based off what these people were telling me or what these indicators were telling me. But I couldn't make a decision off my own judgment because I basically didn't know what to do. I had to rely on someone or something else. It wasn't until my mentors really took me aside and said, Steve, listen, put the power back in your hands, trade with a little bit more, attention to the process as opposed to giving your, power away, and you'll start to get into that road to consistency. So this is what turned my trading around, because the first couple of years of trading, I couldn't make a dime. Ultimately, this concept turned my trading around, and this is what we teach and try to instill in all of our members. Remember, as you see here, my goal is not to trade for you, not to have you come to a daily presentation and find out what to buy or what to sell. My goal is to teach you how to trade with a specialist edge. This is the same edge that was able to turn my trading around and what has sustained me for nearly 40 years, and this is the same edge I want to instill in all of our members. So that's the philosophy behind specialist trading. Now, today I'm going to be teaching you a great class today on how to increase your consistency with candlesticks. But before we begin, since this is an educational class and you will be getting some techniques that you can start using and applying as early as today, once we're done, I would like to conduct this as a classroom. So if you have any questions, kindly wait till the very end of the presentation. There's a little question and answer box I have to open up in order to see all of your questions, and I won't even be opening that up until we are concluded. So it doesn't make any sense to ask me a question because I won't even be seeing it. I will just actually answer one question, which is the most popular. I'm sure all of you are thinking this already, and is this being recorded? Yes, it is. If you happen to have technical difficulties or if you have to leave the presentation early, don't worry, you can go to Pro Trader Strategies and request a link to this presentation. If you look in the chat box, I believe they've put down their email address as well as a phone number. Okay, so in about 20-25 minutes, we will answer all questions. So why don't we begin? And let's start out by me asking you a question. Does trading candlesticks with conventional wisdom work? And by conventional wisdom, I mean the way 99.9% of all of us were taught, myself included, when I first learned candlesticks over 35 years ago. Let's look at some specific candlestick patterns, and there's a lot of them. We know, I believe there's close to 50 candlestick patterns altogether. These are the most popular, anywhere from a doji to an evening star to a hanging man. They're all very popular, and they're good candlestick patterns. In fact, we use them in a couple of our strategies. But let's talk about just one today, even though the technique I'm going to be sharing with you can be virtually applied to all candlestick patterns. Let's keep things simple today for those people who aren't familiar with candlesticks or who've never used them, or just so that we don't confuse a lot of people. We're only going to be talking about one, and I believe it's the simplest and most popular candlestick pattern, and those are engulfing patterns. All right, so let's just go into a brief refresher course of what engulfing patterns are. It's a two-bar pattern, okay, as you see here, 2 bars. The first bar, or bar number 1, is usually down. In other words, it opens and then closes lower, as you see by the dark body there on the left. Bar number 2 is an update, meaning that it opens and then closes higher. Okay, what we're looking for when we say engulfing, we want the range of bar number 2, open to close range, not the range from the top to the bottom or bottom to top of the wick, but just the open to close range to totally engulf the open to close range of the down day of bar number 1. And that's it. It's basically a reversal pattern based off of 2 bars. It's a 2-bar pattern. But when you see it, there's a very high level of consistency that you will be continuing in an upward direction for the next 1 to 5 bars. And it doesn't matter if these bars are 5-minute bars or monthly bars. It's the same level that of a success that you most likely, or high probabilities that you most likely will be continuing in that direction. Now that's a bullish engulfing pattern, meaning that the bias is towards the upside. If you want bias to the downside, you have obviously a bearish engulfing pattern. It's the same thing, just turned upside down. It's a 2-bar pattern. Bar number 1, though, is an up day, as you see here by the open candle. It opens and then closes higher. And then bar number 2, the dark body candle, opens and then closes lower. So what we're looking for is for the open to close range of bar number 2 to totally engulf the open to close range of the upward day of bar number 1. When you see this, you have a bias for continuing in a downward direction for the next 1 to 5 bars. It does not matter what the bars are, okay? So there's a nice edge here when you see this, and this is probably one of the most popular and easiest engulfing, or I should say candlestick patterns to spot. As we look here, we see that this is the standard definition of engulfing patterns. The engulfing candlestick pattern is a reversal pattern. Extremely important. It's a reversal pattern. So what does that mean? Well, this usually occurs at either the top or the bottom of a trend. So in other words, if the trend is going up, we look for this as a reversal pattern, meaning that the trend is going to stop and then go lower because it's reversing, obviously. And then conversely, if the trend is going lower, if we're in a downtrend, we look for this at the bottom of that downtrend because it's a reversal pattern, meaning that we are going to reverse that downtrend and start to go back up. This is the standard definition of engulfing patterns, their standard use. This is the way conventional wisdom applies them to any and all markets and any and all time frames. So this is the way I was taught roughly about 35 years ago. Let's look back at that chart we looked at earlier. Now, obviously, if we look at this older chart at CVX, we are in a downtrend, right? So what are we looking for? Well, we're looking for a bullish engulfing pattern telling us that the trend is reversing and then we'll start to go back up. In other words, we're trying to pick a bottom here. So what do we have? Well, we have a bullish engulfing pattern right at the bottom of that downward trend. So obviously, conventional wisdom tells us we have to buy here because this is where we're going to fix, the end to the downtrend, and we're going to start going upward. So you jump in and you buy, and then look what happens. Okay, does this look familiar to anybody? It looks familiar to me because this is the way I used to trade. But then I used to second guess myself and say, well, everybody in the world uses candlesticks. They can't be all wrong. So maybe I just jumped the gun. I got in a little bit too early. So the trend continues to go lower. And guess what? We have another bullish engulfing pattern. So I'd always tell myself, well, you know what? I got in a little bit too early. This is going to be the bottom of the trend. So I will jump in and buy here. And then lo and behold, I'd buy and it would go even lower. Once again, look familiar to anybody. So I really started to question myself and say, I would use this and apply this to other candlestick patterns, and I would get the same results. I would have maybe 1 or 2, possibly 3 great trades in a row, and then the next one I'd give everything back, like you see right here. So there really wasn't any consistency. So I wanted to have this consistency where a lot of the trades really worked out well. So here's what my mentors taught me. Because I asked them, I said, how do I increase my odds for success when trading with candlesticks? And they opened my eyes by just explaining this simple concept. And this is the concept I'm going to be sharing with you today, and that candlestick patterns will have a higher level of consistency if you trade them in sync with the trend, okay? I'm going to say that again because this is how important this concept is. Candlestick patterns will have a higher level of consistency if you trade them in sync with the trend. You see, this goes against everything we've ever been taught. We've always taught that candlestick patterns, or just about 90% of all candlestick patterns, are trend reversal patterns. And they're supposed to tell us when the end of a trend is. We're supposed to be able to pick bottoms and tops with them. But in all actuality, in my nearly 40 years of trading, there's no consistency in trading them that way. All right, there are probably a very small amount of traders who are able to consistently trade with candlesticks in that way. But the majority of us, myself included, have never been able to make a dime trading with them that way. We have a better or a higher level of consistency if we trade them in sync with the trend. Okay, so this was the great truth that my mentors taught me. And once I started applying this to my candlestick trading, that's where everything started to go in my favor. So let's look at the trending tools that you can start using as early as today if you'd like, all right? We can use indicators. A lot of people like to look at indicators. One of the most basic ways to find out what the trend is by using moving averages. A lot of people like to use moving averages or even oscillators to tell them what the trend is. That's one way to do it. You can also use patterns. Okay, there are specific patterns when you see whatever market you're trading making higher highs and higher lows. Well, you're most likely in an uptrend. If the equity or issue or currency pair or future is making lower lows and lower highs, well, obviously you're in a downtrend. So this is a good way as well to figure out what the trend is. And then you can look at time frames, all right? Even though I've never really subscribed to this way of trading, a lot of traders say, well, listen, if I'm using a specific pattern or indicator to tell me what the daily trend is, I want to see that the lower time frame is also in sync with that, and that will get me in sync and I'll be able to trade that. So I always look at the higher time frame to tell me what to do in the lower time frame. So if the higher time frame is in a downtrend, the lower time frame needs to be also in a downtrend and vice versa. Now these are all valid. They have a certain level of consistency to them. I'm not saying that they're wrong or that you shouldn't use them, but in my nearly 40 years of trading, they will only give you so much consistency. They're okay, they're very generic, and I'm sure many educators and webinars you go to swear by them. Once again, I've been trading for 40 years. I've just never really found that level of consistency with these, all right? But we still want to trade in sync with the trend. So therefore, we use what I have found in nearly 40 years to be the best trending tool available. All right, you've heard me speak about this before, and that's how much I'm really devoted to it. It's the PET D. Now, this is a formula that I was taught on the floor some 35 years ago. And when I was taught this specific formula by my mentors, it was something I had to calculate by hand. And because of that, it's not that it was that overly complicated, but it just was a little cumbersome. We couldn't really apply it to intraday trading or different time frames. We could only apply it to daily bars. So it was a great tool for showing us what to do on a daily time frame, all right? But because of high-speed computers now and because of programmers, we've been able to program it into a color bar tool. So it's basically showing you a series of green bars tells you you're in an uptrend, all right? And if you see a series of red bars, well, it's in a downtrend. But this is all proprietary because we're keeping this in-house. We have hedge funds that are interested in purchasing the PET D, but we want to keep it in-house, so we're keeping it proprietary. But all you have to know is that if you have red bars, the trend is down. If you have green bars, green bars, then the trend is up. So here's how we're going to apply it to candlestick trading, most specifically using bullish and bearish engulfing patterns. Remember, engulfing patterns are a two-bar pattern. So how do we use it? Well, we're only going to buy if the engulfing bar, which is bar number 2, is colored green. So you see how simple that is. We don't have to look at indicators. We don't have to look at different time frames to find out what's going on. We don't have to look at other markets. We don't have to listen to the news. If we see an engulfing bar, that two-bar pattern, we just want to see that bar number 2 is green. That gives us the confirmation to take it. Now, if both bars are green, great. But it doesn't matter if 30 bars before bar number 2 were red. That's okay. As long as bar number 2 is green, we take the trade. That's how simple this is. So if we look at this older chart here of SYY, someone looking at this would say, well, Steve, according to my tools and what I use or the course I take with my other educator, there is no trend here. We're going sideways. We're in a range. And what my teacher says is to always stay out of ranging markets because that's where you get whipsawed. That's where you lose money. Okay? This is the way 99.9% of most traders are taught, myself included when I first started out. But once you know how to apply the PET D, you simply apply the color bar tool. First of all, we see a bullish engulfing pattern here, but we're not going to take it because why? Remember, standard conventional wisdom tells us that you only apply a bullish engulfing pattern in a downtrend, all right? But we're not going to do that anymore. We want to apply it as long as we know that we have some type of uptrend. But how do we do that? Well, we apply the PET D. And as we see here, the majority of the bars were red, telling us we were in a downtrend. Even though we're going sideways, the PET D is telling us we are in a downtrend. But all of a sudden, we started to get a splashing of green, and now the majority of bars are green. And since we have a 2-bar pattern here, a bullish engulfing pattern, what is the color of bar number 2? Bar number 2's outline is green. So that tells us it's okay to take the trade. Okay, even though you're going sideways, even though your trading room or chat room says, no, don't buy that, there's no trend there, we take the trade because we do not, remember, as I said in the opening statement, we do not listen to outside sources. We only listen to one thing, and that's the market in front of us. So the PET D is simply translating what the market wants to do. It's telling us we're in an uptrend. So you could have had the confidence to take this trade, and in 1 week, the stock gained 5 points. Okay? Now let's look at bearish engulfing patterns. All right? It's the same concept, but now we're just going to look at bar number 2 and see what color it is. Now, if we get a bearish engulfing pattern, we don't care about what the higher time frame is doing. We don't care about any news. We don't care about what some guy is saying in a chat room. We only care about what the color of bar number 2 is. So we're only going to sell if the engulfing bar or bar number 2 is colored red, because that is the PET D translating what the market is or going to do. It's telling us that most likely it's going to be going lower because we're in a downtrend. So therefore, as we look at this scenario right here in DVN, we see we've been going lower. All right, and conventional wisdom tells us, well, we're in a downtrend, we're heading lower, so I want to look for a reversal pattern, right? That's the way we're always taught. We want to look to buy at the bottom here. So if we study engulfing patterns, we see that we have 2 bearish engulfing patterns right here. Conventional wisdom tells us, no, we're not looking for bearish engulfing patterns, we're looking for bullish engulfing patterns. But we know there's no consistency in that. There's no consistency in trying to pick bottoms with these things. We're trying to be in sync with the trend. So what is the trend as according to the PET D? Well, the PET D has been coloring every bar red. Since the very top, the beginning of this downtrend, we've been red. The PET D has already shown that it's translating the market wants to go lower. So it's okay to take these trades. We're not going to negate them and say, oh no, we can only look for a reversal pattern. Why miss out on this? Because you had a very nice move to the downside. So let's say you took those 2 trades and you're very happy, you're very proud of yourself. You traded a little bit different, a little bit out of the norm that you usually trade. But now you're starting to get a little scared. You say, you know, I've got a good profit, I covered, and maybe this is the time it's actually going to work, because what do I have here? I have 2 bullish engulfing patterns. So this is where we're most likely bottoming out. And sure, Steve Primo stuff works every once in a while, but I'm going to stick to conventional wisdom because, you know, it's a reversal pattern. This is the way people have been trading candlesticks for hundreds of years. So you cover your short and you decide to go long. But the PET D is telling you what? The PET D is telling you you're still in a downtrend. If you're in a downtrend, you do not want to buy. And look what happens. See, you don't want to swim upstream. You want to swim with the current at your back. That's how you're going to get that level of consistency that hopefully one day will be able to sustain you for nearly 40 years. So the market goes lower, and now you gave back everything you made in the first 2 trades. Once again, this is the way most people trade. Instead of 2 steps forward, 1 step back, it's 1 step forward, 2 steps back. So now you've lost everything you made, and you're actually in the hole. And the market continues to go lower. And here you have a bearish engulfing pattern. Now you don't take it because you're scared. You think it can't be going much lower. There's no way. We've gone down too far. But the PET D is telling you the trend is still lower. It's in your best interest to take this, and look what happens. Had you taken the very first couple of signals right there at the very top of the downtrend, that's a 25-point gain in just 2 months. Okay? So see, there is a higher level of consistency if you trade candlesticks in sync with the trend. Okay, don't just take my word for it. Go back and look at your last 20 or 30 candlestick trades. See how well they work for you. I really strongly believe that if you apply this simple concept to your candlestick trading, you will increase your odds for success in terms of consistency. Okay, so that's the basic concept. Let's look at some more stock examples. We'll start off with some stock examples that are a couple of months old, and then we'll go as recent as examples that are just a couple of days old. Okay, let's look at HRL here. Once again, someone looking at this would say, well, Steve, no trend. We're going basically sideways, so we should really stay out of this and we should not be involved in anything, okay? But as we see here, if we apply the PET D, we see here that we're basically in an uptrend. The majority of the bars are green, and we are met with bullish engulfing patterns, 2 of them right here. Remember, in order to take the trade to have confidence, bar number 2 must be colored green. So each of these is colored green. So you could have taken that trade in HRL at the end of November and 12 points up within the next month by the end of the year, okay, coming into January. All right, so let's say, we're just telling you that's how much room you had to work with, 12 points that went in your favor, okay? But as we see here, what are we met with? Well, we're met with, in the middle of January, just a couple of months ago, a bearish engulfing pattern. Normally, you wouldn't take this, but it meets all the requirements. By adding the pet D, bar number 2 is red. So that is either telling you to get out of your long trade, or if you're already out, you can use this to go short. And there's 4 quick points to the downside. See how easy this is? We don't have to listen to any news. We don't have to worry about what the earnings are. Those things are all very subjective. How many times have you thought good news comes out and the stock goes straight down, or vice versa? How many times have all the requirements been met to a perfect system and it doesn't work and it continues not to work? Remember, don't give your power away by listening to things that have no consistency. There is a consistency when you trade candlesticks in sync with the trend as opposed to trying to buck the trend. How about fossil, FOSL? Once again, it looks like we're just going sideways. This was in September, October of last year, but we add the pet D and we see that the majority of the bars are red. But this still doesn't give us enough information until we see here that we have a bearish engulfing pattern. What color is bar number 2? Bar number 2 is red. So we have the confidence to take this trade, even though it looks, everyone else in the chat room is telling you, no, this stock is just going sideways. It's not telling you it's going lower. The earnings don't come out yet, so we don't know if it's going to be good or bad. Who cares about that stuff? I stopped looking at earnings over 30 years ago, okay? And I'm still trading. So what do you need to convince you that you don't really need that in your trading? So we have a bearish engulfing pattern that is validated by the pet D, and look what happened, okay? Now, the beauty of this is that if we're looking at a number of candlestick patterns, we're going to get a number of opportunities to continue to sell. But just by looking at bearish engulfing patterns, look at all the other opportunities we still had. So you don't have to ever worry as if you've missed a trade, okay? Don't think that way. That's more of a gambling mentality, like, oh, I didn't bet on the right team, or I missed that bet, or I went to the wrong table and I missed the big run that's happening somewhere here. That's, if you're trading, you should never think that way, because there's always opportunities presenting themselves. All you have to do is just jump on in. So even if you had missed that very first sell signal, the stock still offered you 2 more that were validated by the pet D, and then look what happened, okay, gap down. Now, obviously, there was some news that happened here. This was in November of this past year, about 4 or 5 months ago, that made the stock gap down roughly from about 52 all the way down to 32, 20 points, okay? But did we know that in advance? Did anyone call us up from the company for solar and tell us, hey, Steve, why don't you tell all of your thousands of students to go short our stock because we're going to release some bad news very soon? No, no one told us. The only thing we listen to is the chart in front of us, because it tells you just about everything you need to know. So that's the beauty of keeping things simple. You don't need to overcomplicate your trading. How about BBY? This was just about a month ago in BBY. As we see here, the trend is down, all right? Just by looking at this, it looks as if the trend is down. But we want to make sure that we're in sync with the trend, so we add the pet D. And at the very beginning of this chart, the first week or so, the trend was actually up. But then we started to get consecutive red bars, so it's okay now. We are in a downtrend. Now, if we're looking at candlesticks, well, guess what? Here's a bearish engulfing pattern that is validated by bar number 2 being red. So it's okay to take this trade. You could have sold at the close of that day, and look what happened. The stock gapped down 4 points. Roughly, you had 4 points to work with in the next day. Okay, so let's say you'd taken that quick trade and said, boy, that was a nice trade. I'm going to get out with a quick profit, okay? But let's say you hadn't. Let's say you stayed in the trade, and it just started to kind of scale back upwards, and then the bars, which were majority of red, now have turned to the majority of being green. So now you start to think, well, maybe we're in an uptrend. And then right here, what do we have? We have another bullish engulfing pattern. So if you were still short from this trade here, you would have most likely covered and then taken this as a long signal. This was just a couple of weeks ago in the middle of February, and look what happened. The stock went straight up, and in fact went up 8 points with both of these trades in just 1 month. How about SNDK? Once again, this was just at the end of January coming into this past month in February. It looks like we're just going sideways. Someone that doesn't have the teaching that we instill in all of our members would say, Steve, there's no trend here. My mentor says stay out of this market because we're just going sideways. Well, at specialist trading, we say, no, we find out what the trend is by adding the PET D. And the PET D is basically oscillating between green and red. But at this point, we have two red bars and we have a bearish engulfing pattern. So this is a valid signal to go short. Even though someone about a month ago would have said, well, no, Steve, it looks like the market's going higher, or there's going to be some great job reports coming out, I don't want to short anything, or this is a great support level here. This is where the institutions, according to my software, tells me the institutions are buying. So why would I want to short this stock? Remember, once again, don't listen to outside sources. There's no consistency in that. Only listen to one thing, what the market is telling you. And the PET D translates what the market wants to do. The PET D is basically telling you it's okay to take this candlestick pattern because the market wants to go lower. And look what happened. Stock went down 14 points in the next 2 weeks, okay? If we look at SHW, this is just actually about a week ago, looking all of February coming into March. Once again, someone would say we're basically in a sideways pattern. Once we add the PET D, we see the majority of the bars are green. We only have two red bars, and we have a bullish engulfing pattern right here. And not much would have happened the first couple of weeks following that, but we have another one right here. So if you're lucky enough to stay in the trade long enough, well, just a couple of days ago, you would have had a 20-point gain in just about 3 weeks had you taken and stuck in with this trade. Had you only taken this one, well, you would have had roughly about a 20-point gain in just about 3 or 4 days. And we can look at MANH here. As we look at this chart, someone would say, not enough information to really figure out what to do. Even though I have a bearish engulfing pattern, I'm not really sure. I don't have enough information to know whether I want to take this. After all, I'm only looking at roughly a week's worth of data. How would I be able to make a decision? It's easy. We don't need to look back years or months or have tons of indicators applied to the chart. All we have to do is add the PET D. And all the bars have been red. So we've known this entire last week that we're in a downtrend. So if we're in a downtrend and we see a bearish engulfing pattern, well, that's all we need to know. The market is telling us, not somebody in a trading room, not some guy on TV or even some guy on a webinar. The market is telling us it's going to go lower. So all you would have had to done is sell it. This was in the end of December coming into the new year. And the stock has dropped 25 points in 1 month coming into the middle of February. Okay? Remember, the market tells you just about 99.9% of the time what it wants to do. But for some reason, we're trained not to listen to it. We're trained to do just the opposite. That's the last thing we listen to, that we want to listen to what some guy's saying on a tweet or what some guy's telling us in a trading room. Just listen to the market. That's the only thing you need to do. And that's what we teach you in our courses. Now, a lot of people say, well, Steve, this is all well and good, but you know, when you get news, all of this goes out the window, right? Because how can anyone trade in the face of news? Well, I'm not going to sit here and tell you that every time there's a news event, we're on the right side. But in my nearly 40 years of trading, I can honestly tell you that with the tools we teach all of our students and members, many times, I would say the majority of times, we are on the right side of the news. So even though every once in a while we will get caught by a news event, that's okay. There is a certain level of consistency where you don't need to view the news. I told you, I stopped looking at news over almost 35 years ago. So if I'm still here, why should you be concerned about it? I'm teaching you the same things that I currently use in my own trading. Now, many times the news is after the fact. As we look here, we see here in January of this year, Yahoo Finance reported that Twitter shares tumble after the executive exodus. In other words, a lot of investors reacted to the disclosure that 4 top company executives were flying the coop or leaving the company, okay? And the stock has been going lower and lower. If we look at the chart, we see here going back to October and November, we have been going straight down. Now, here's what most traders say. They say, well, Steve, yeah, it's easy to see we're in a downtrend. Why would I need the PET D? Why would I need to know all of these things, what you teach? I can see for myself that we've been in a downtrend. That is true, looking back in hindsight. But wouldn't you have liked to know we were in a downtrend way back here, before the bottom fell out, before the executives left, before, you know, we lost just about half of our value? Sure, it's easy. All you have to do is apply the PET D, and we knew well back here that all the bars were red. So this is all we needed to know, all right? Once we know that we're in a downtrend, we simply apply candlestick patterns to this and look at all these sell signals using engulfing patterns that you could have had in your favor, well before the news came out with the executives leaving. Okay. Now I want to show you this because not only does it work just with regular stocks, but with ETFs. These are the spiders. I'm sure most of you are familiar with them. They're very popular. They just represent, they're an ETF that represent the S&P 500 in a stock form. Now, if you recall, at the very beginning of this year, we had a strong downward move in the month of January. A lot of people were caught off guard. I remember people sending me emails saying, boy, who knew that this market was going to fall out of bed? I thought we were really strong and going to be making new highs in the new year. Well, if you had the PET D and you were applying candlesticks, you would have known as early as the middle of December that we were going lower, because these are the spiders on a daily time frame. As you can see here, the beginning of December, the bars were red. We have one green bar followed by a red bar, and it is a bearish engulfing pattern. So in mid-December, the market, not some investor, not some guy on a presentation in a chat room, or not somebody tweeting, but the market was telling you, hey, guess what? I'm going to be going lower. So why wouldn't we just jump on board? Okay. The market had some really strong downward moves, but you would have known in advance that we were going lower because of the PET D. Now, you can also apply this to bonds. It's a 30-year bond. This is a monthly chart, so we don't just have to apply this to stocks, and we don't just have to apply this to daily time frame. We look at these are all monthly bars with the PET D, the same tool applied. Now, this was going back 3 years. In May of 2013, there was a bearish engulfing pattern in the monthly bonds, and as you can see, bonds went lower. But coming into the beginning of 2014, what do we have here at the very bottom? A bullish engulfing pattern, and bar number 2 is green. And look at the nice rally in bonds that followed. Now, someone here is saying, well, it looks like in 2015, last year, about a year ago, we topped out. Well, the majority of the bars are still green, and we had 2 more bullish engulfing patterns. In fact, this one was just last month. So what is this telling us? On a long-term time frame, bonds are still, or should be, going higher. How about sugar? All right. Now, I personally don't trade sugar. I've shown this chart before. I don't trade commodities. I used to trade commodities, but I don't trade them anymore. Specifically, just focus on stocks, currency pairs, and the futures. But it doesn't matter. The same principles and concepts that we teach can apply to virtually any market and any time frame. We have a number of our students who only trade commodities. Now, here's a daily chart of sugar going back to October of this past year. Starting out with this chart, the first 4 or 5 bars were red, and then we sequenced into consecutive green bars. And then right here at this point, we had another bullish engulfing pattern. So that was telling you that sugar was going higher. We're not looking at support and resistance. We're not looking at supply and demand. We're only looking at what the market wants to tell us. And the market at this point was telling us it wants to go higher. So why not just buy sugar? And look what happened after that, coming into this year. We can also apply this to crude oil. Now, everyone in the world has been wondering when's crude oil going to stop its downward descent. We don't ask that question in specialist trading. We don't care. We're just going to go in sync with whatever way the river is going. If the river is headed south, we're swimming in that direction. If the river is headed north, we're swimming in that direction. We always want to be swimming with the current at our back. So looking back here at crude oil, going all the way back to November and December, the current has been going south, as represented here by the PET D. So the only people that have lost money trading crude oil are not our students. They're the ones where the webinars where they tell them that we've made a bottom because let's say we've hit some nice, real good support here, or if that support doesn't hold, well, this is where all the institutions are buying based off some numbers, and when that one doesn't hold, then they'll come up with another reason. We don't care about those things at specialist trading. The only thing we care about is what the market is telling us. And well back into November, even as far back as October, the market was telling us through the PET D that it wants to go lower because virtually all the bars are red. So all we have to do then is just look for bearish engulfing patterns, bearish engulfing patterns, bearish engulfing patterns. They're all over the place. Now let's look at the E-mini S&P because I know a lot of you also trade futures markets. I want to go back to an older chart here in August. Remember in August when the market really had some downward slides. In fact, it was down over 1,000 points intraday at one point. Okay, a lot of people were caught off guard. I had a lot of people telling me, Steve, you know, I'd love to take your courses, but there's no way you could have protected me because all the institutions, all the high-speed frequency trading systems, they're really in control of the market. There's no way that a little guy like me would have known that the market was going to fall out of bed. And I always tell them that's not true. I have a weekly chart here of the E-mini coming into end of July, beginning of August, okay? In that week, all of the bars, or I should say the months before, were all green, telling us we're in an uptrend. Then we started to get a confluence of red bars, and what do we have here? At the end of July, not even in August, when August was such a terrible month, at the end of July, on a weekly time frame, we had a bearish engulfing pattern, and bar number 2 was red, okay? So on a weekly time frame, if you're an investor, you could have used this as a market timing tool to get out of the markets, or at least to stay on the sidelines and not to look for long setups, because look what happened to the market right after that. The market went straight down. Now, right after that, everyone was shell-shocked. Everyone was really scared, and they thought, you know what? I think we just entered into a bear market. I'm going to get out of everything because most likely it's going to go lower. We'll most likely have a little bounce, and then we'll go much, much lower. Okay. In fact, in October, as you see here, I spoke at a seminar in Las Vegas where everyone was asking the speakers what they thought of the market, and everyone said the same thing. They said, we're going to bounce a little bit, and then we're going to make new lows. When they asked me, I said, well, literally, I have no idea what the market is going to do. I just follow whatever the market is telling me at the moment. And they asked me, and they said, well, what, according to your tools and techniques, is the market telling you? And I said, well, if we're looking at a daily reference, a daily time frame, which we have right here at the beginning of October, I said, all we have to do is apply our early trend detector, which is the PET-D, and that tells us what the trend is. So as we see here, the very first day of October, the bar turned green. Now that's all fine. That's not really giving us enough information, but at the same time, it was a bullish engulfing pattern. So I told everyone, I said, actually there is an upward bias. I don't know if it's going to last. I don't know if it's just going to get ready for us to go lower, but I know for right now, until we get a confluence of red bars, I'm going to say we're going higher. And everyone was just amazed. They said, there's no way we can be going higher. But as we see here at the beginning of October, well, the market went up on the E-mini 160 points in 1 month. In fact, it went up all the way till the end of October, going into November. Okay. Now, if you just had taken that one signal using this simple technique, that's $8,000 per contract in the E-mini. All right, so that was on a daily time frame. Now we can go to a smaller time frame. Here's coming into December now on a 30-minute time frame. This is on a daily chart. This was the very first day of December, so about 3 months ago. All the bars were green, and we had a green bullish engulfing pattern here, and the market went up a little. And this is how we say there's a high level of consistency, because had you not taken this trade and gotten out here, well, most likely you would have had a small loss, because then the market started to turn around, and now on a 30-minute time frame, it's telling us it wants to go lower. So now you're left holding this. You could either exit with a loss, or you could have confirmed once you had this bearish engulfing pattern and exited with a small loss. But you would have had some nice gains here, maybe about 5 or 10 points, but then you would have given them all back. That's okay, because as I stated, not every trade is a winner, but there's a high level of consistency when you trade in sync with the trend. Because had you taken that very first buy signal, sure, you would have broken even or lost a little bit, but if you'd gotten back in on the short signal, look what would have happened. 50 points in 2 days, okay? So do you think you could have made back your loss there in the next couple of days? And remember, there was no news that we knew about in advance. We don't follow news. In fact, we encourage our students not to follow the news, because that only serves to confuse them even more. We just say to follow, what the market is telling you through the translator, which is the PET-D. And it was telling us it wants to go lower. So you would have made back that initial loss and then an extra 45 points to the downside just in a couple of days. Now, there's many more chances along the way. Don't ever worry, once again, like a gambler, that, boy, I missed my chance. I missed that great, that great run that happened, or that great win. I didn't bet on it. The market is always giving us more and more chances. All we have to do is have the guts enough to take them. Now, just to show you that we're not cherry picking things that happened 2 months ago or 2 weeks ago, this is what happened yesterday using the same techniques. Nothing has changed, haven't altered anything, simply because it happened yesterday. Everything that I've shared with you today, we could have used in yesterday's market trading, intraday trading, the E-mini. We all remember that the market gapped up yesterday and it continued to go higher and higher. How would we have known to stay long, though? A lot of people were saying, well, we're going to go up and then turn around, reverse, and sell off on the day. Well, here's the market on a 15-minute time frame. As you can see, in the lower left-hand corner right here, it's the first day of March, the beginning of the month of March, okay? And we opened and continued to go higher and higher throughout the end of the day and then closed on the high. As you can see here, this is the end coming into 3-2, which is today. All right, so look, once again, this is what most beginning students say. Well, they say, well, Steve, sure, we're in an uptrend. I mean, it's easy to see. You're right, it is easy to see, but wouldn't you have liked to know you're in an uptrend well back here at the beginning of the day? Well, you could have. All you have to do is add the pet D. And we see here that not only did it color all of the bars green throughout the day, but right back here, the very first day was green. As you see here, this is a candlestick bar, and we opened and closed lower. And the next bar opened and closed higher, but they're both covered with green, okay? So that's a valid buy signal. So in the first 30 minutes of the day, you could have taken advantage of that, and if you were lucky enough to hold on all day, if you had the guts to hold on all day, that's 34 points in your favor, roughly about $1,700 per contract. But once again, the market always gives us more chances if we miss the first one. So you never have to worry. You just have to have the guts and courage enough to get back in, because there's another one there, and here's another one right here. So this was yesterday's action using the exact same tools, the exact same candlestick pattern. Now lastly, I want to show you some Forex charts here for all you Forex traders, just because, you know, I want you to see how this works in every market, in every direction, and in every time frame. Let's look at a daily chart of the euro dollar. This is an older chart of the euro dollar. Someone, once again, looking at this would say, well, Steve, there's no range here. We're just kind of going sideways. And here's a bullish engulfing pattern. So I don't think I'll take this trade. But if we add the pet D, we see here that it is a perfect scenario to go long. Bar number 2 is green. So you could have taken that trade, and guess what? In 3 days, you could have had a 600 pip gain, or roughly about $6,000. Now, we can go to a weekly chart. Here's a weekly chart of the Australian dollar. All right. Now this fits the standard conventional wisdom of being in some type of an uptrend and then being met with a bearish engulfing pattern. Now most people would say, but Steve, that goes against your philosophy. I thought you want to be in sync with the trend. I do want to be in sync with the trend. And I don't look at the chart to tell me what the trend is. I look at the pet D. And if bar number 2 is colored red, that's all I need to know. And it is colored red here on a weekly time frame. So even though we're going higher, bar number 2 is colored red, so that gives me all the information I need to know, and 900 pips in 3 months, or $9,000 per contract. We can still go out to a higher time frame. Let's go out to a monthly time frame of the dollar yen. This is going back all the way back to 2012. As we see here in March coming up into September, October, the bars were red, and then we had one upward green bar. So at the very bottom of this chart, the market, not some guy on TV, not some economical report, but the market was telling us, well, it looks like the trend is up. So you may want to buy here. And look what happened. 4,500 pips, $45,000 in the next, I would say, the next 3 years, if you happen to stay in that long. So let's recap as we go to question and answer portion of our presentation. Remember, if you want to be in sync with trading candlesticks, you cannot use it in the conventional standard way. In other words, I have found out through my nearly 40 years of trading, there is no consistency in using candlesticks and applying candlesticks to your trading, regardless of what market, regardless of what time frame, in the standard generic way in which we're using them as reversal patterns. Now, I'm sure every once in a while you will see one that works perfectly, and you'll say, well, Steve, I thought you said this stuff doesn't work. I did not say it doesn't work every once in a while, because remember, when I traded that way, it would work 2 or 3 times, but it was always the next one where I'd give everything back. So remember, it's about consistency. We're not trying to tell you that none of that type of trading will work, but we're trying to make you consistent so that you can be trading 20, 30, 40 years down the road. We're not just trying to give you one good trade here every now and then, but then at the end of the year, you've really lost money. So therefore, only buy or sell candlestick patterns that are in sync with the trend. And the best way I know to be in sync with the trend is by simply applying the pet D. You don't need to use a ton of indicators. You don't need to look at patterns. You don't need to look at different time frames. Remember, keep things as simple as possible by changing the color of the bars, either green or red. So here are the points to remember now as we go into the question and answer portion of this presentation. This is not a complete strategy. I know a lot of you are probably asking me, well, Steve, okay, this is great, but you didn't say where I enter. You didn't say where I exit because it's true. We didn't talk about advanced entry signals. There are different ways in which to enter using our courses and our techniques. We also didn't talk about stop placement. Where would you protect yourself? Would you place it just below the lowest low? Would you use some type of indicator to tell you where to place your stop? Where do you place your break-even stop if you continue to go in your direction? We also didn't talk about exits. All right, where do we get out? Now, I showed you how much profit you could have taken, but I'm not going to tell you that you would have stayed in that entire time. Sure, some of our students did, but not everyone does. Some of our students like to get in and out quickly. So where would you have known where to exit? And then lastly, money management. How many contracts? How many shares should you be trading? Okay. How do you protect your investment? How much should you risk out of your portfolio? These are all things that we did not cover that are extremely important pieces to the puzzle. So what I shared with you today was just a concept that you should be applying, but we didn't go into detail in terms of entry, stop placement, exits, and money management. All right. What if I could tell you all of that information within a course? Well, here's what we're offering all of our attendees today. It's our candlestick combo. It's the Primo strategy number 5, which has to deal with candlesticks along with the Pet D. Now, what you're going to be getting, this is our 2016 New Year special. You get instant course access, okay? It's not something you have to wait to be shipped to you, or not something that takes weeks in order to get a booklet or a pamphlet. This is an online course, so you'll have immediate access. It's detailed instruction, 5 videos that you can study at your own leisure, all right? I go over all exact entries, exits, and stop placement, okay? You also get the Pet D. This comes with the Pet D so that it automatically colors your bars either red or green. And this includes both the add-ons. The add-ons meaning that the things you just simply add on to your charts or you upload to your charts, where you get a buy or sell indication telling you when there's a strategy signal, and then you get the actual color of the bars as well through the Pet D. Lastly, since you are now a student of mine and I'm going to be mentoring you along in this course, you have lifetime correspondence with me. So you will always be able to contact me. It doesn't matter if it's next week, next month, or next year, or the next decade. As long as I'm trading, as long as I'm still around, you are my student. You can always contact me. This all comes within this special 2016 New Year special of our candlestick combination. This is what we call our candlestick combination. Now, these can be applied to any market, any time frame, and any direction. So it doesn't matter if you say, well, Steve, I only trade currency pairs on a 5-minute time frame. Great. We have tons of students who do that. Or if someone says, well, Steve, I only use my long-term portfolio to trade. Great. You saw I showed you monthly charts where this works just as well. Okay. Now, after I've seen through my mentorship and instruction that you really understand the concept of how to apply this candlestick combo, then we start furnishing you with educational signals. These are signals that are emailed to you on a nightly basis when a signal has been generated. But let me first explain that they're not meant as signals for you to blindly take, because remember, that goes entirely against our philosophy. We don't believe in just posting signals so that you can take. We are posting these signals and emailing them to you as educational tools so you know what to look for. So if you're having difficulty in identifying the signals on your own, which is what we ultimately want to encourage you to do, we provide you with the answers. In other words, so you can look and say, oh yeah, I get it now. I see why a signal was generated. Or once you get the email, you say, exactly, that's what I got today too. Let me show you what I mean here. These are signals that we, once again, when a signal is provided, we share them with our students within the different courses. Now, since you're taking the strategy number 5 course, okay, you would get an alert such as this. Now, this was an email alert just about a month or 2 ago in WTW, as you see right here, strategy number 5. It was issuing a sell signal. This is Weight Watchers, has been in the news lately. Now, we all know that it's been heading lower, but this was at the beginning of the year. And we started to have a nice sell-off here, but then we recouped and started to bounce. A lot of people were saying, well, there's really good support here. Looks like Oprah Winfrey is coming back into the market and buying more stock. Or this is a very good Fibonacci support, or maybe this is the level 4 of a 4 wave, and we're going to making higher highs. Remember, don't overcomplicate your trading by listening to these things that are too subjective. We want things that are cut and dry. And so once you get all the rules to strategy number 5, you see that a sell signal was generated on the 5th of January. Now you could have, if you're a skilled trader and you don't mind being that aggressive, you could have gotten short at the close of that day. But on that night, we emailed you that a signal had been generated. So you would have seeing that a signal was generated, and then once you applied the PET D, it would have given you the confirmation to go ahead and take that. This is our candlestick combination, the strategy along with the PET D. So now that you had the confirmation to take the trade, guess what? WTW fell 10 points or 48% in the next 2 weeks. All right, so much for great support, so much for institutions holding up the market, so much for Fibonacci levels. Doesn't matter. All right, the market, remember, tells you just about everything you need to know. Our only problem as traders is that we don't focus on that. We for some reason are taught to listen to other things. We teach you at Specialist Trading how to only listen to the market. Once you know how to do that, you don't have to rely on anything else, not even myself as your mentor. In fact, we encourage you to leave the nest. Once you get it, there's no reason for you to stick around. You don't have to pay for subscription, and each month tell us what you're looking for. This is something that you have, okay? So this is what we're offering you, the Primo strategy number 5, along with the PET D tool. Okay, this is our candlestick combo, comes with instant course access, and this is our special for all the attendees today coming into the new year. Now, if you purchase these separately, roughly this goes for, I believe, about $3,500. Okay, that's how expensive this is because that's how powerful these two techniques are. Okay, so for a one-time fee, you can get this for roughly about $3,500. But we're going to give you a really nice discount, a really nice package today. Here's what we're doing. We're giving you a one-time fee of $14.95 followed by a $97 per month fee in order to get you started. So in other words, you don't have to come up with that large lump sum of roughly $3,500. But if you do want to come up with one lump sum and you don't want to pay that monthly fee of $97, well, guess what? We've discounted that as well down to $29.95. All right, so there's lots of ways to take advantage of this, but remember, these are for a limited time only, and you can also get payment plans with this included. So, there's a lot of ways to get on board with our candlestick combo. So here's how to do it. Remember, my sister site, Pro Trader Strategies, they handle all of my courses, all of my promotion, and all of our sales. You can contact them at the email address provided right here, as well as calling them at the phone number, okay? They can set up that payment plan with you. They can have all the information set to you ASAP, and so you can be up and running with instant access as soon as possible. I'm going to leave all this information up, and as you see right there, that is the link that will take you to the sign-up page at the very bottom of this informational page, but it's not a live link. You have to copy and paste that onto your browser. If you want to go to a live link, if you look in the chat box on your far right on the GoToWebinar page, Pro Trader Strategies has a link posted there. You can see there it says to learn more or to start using the PET D, use this link. And so just simply click that on and it will automatically take you to the sign-up page. All right, we are at the question and answer portion, and I want to thank you all for holding off. I'm going to leave this information up here on the screen, and then I'll open up the question and answer box so I can answer any questions that you may have. Okay, let me just go back to the beginning here. Let's see. Marvin says we need the candles to confirm the direction. Actually, that's not true, Marvin. We need the PET D to confirm the direction. Okay, so if you're using this technique, the candles are just giving you a high probability setup. Okay, the candles, it can be a candlestick pattern, any one you want. It can be a morning star, an evening star. It can be a doji. It can be a bullish or bearish engulfing pattern. It really doesn't matter. But the candlestick patterns are just showing you an edge that is taking place. The PET D is telling you, is confirming the direction. So you apply the PET D to whatever candlestick pattern you're looking at, and it confirms whether you should take that edge or not. Okay, that's the beauty of this. Now, this is all covered in our course. So there's a lot of information you can get on how to highlight that style of trading. Okay. David is asking, what is the difference between a solid green and a bar with only a green outline? Okay, David, this is a great question. Probably one of the most common ones we get with our candlestick patterns. And the best way to answer this is to know that for some reason we've all been looking at a hybrid way of applying candlesticks. For some reason, going back when candlesticks started to become popular within the United States, they started to color the bar. So a downward day was usually colored red, and an up day was usually colored green. Okay, so people got accustomed to thinking this is the way candlesticks are used. But in all purposes, that's not the way they were originally applied. That's not the way they're used in Japan. When you have a down day, the bar is black. It's called a dark body. And when you have an up day, it's a hollow day. In other words, you have a white background because these are usually written on paper, and you just had an outline, a black outline. So that told you that you had an up day. Now, when you apply the PET D, we simply overlay those hollow days or dark black days with either green or red. So when you have just the outline being green, it tells you that you're in an up day and that it is being confirmed or that you're in an uptrend. If you have a down day, you're not going to see a red all the time. Many times you will have a dark down day, which is black, but overlaid with green. So that's just telling you that even though the day was down, as as displayed by the candlestick, the trend is still up. So there's no reason to be selling. So this is why we use them in the conventional way. This is the way I was taught to trade candlesticks some 35 years ago. It was not with red bars and with green bars. That's the PET D, the way we've applied it now. But originally candlesticks in their most standard format was just a down day was always black and an up day was always white with a black border. Once we apply the PET D, then you can see it more clearly now. Okay, so that's the difference. I hope that makes sense. And plus, once you become a member of ours, we have a great tech support team, and they can help you set this up as well. So even if you're having difficulty and you say, well, boy, my candlesticks aren't like this, we can help you set this up with that. So with no extra charge, this all is included in the candlestick combo, okay? Mike is asking, where do you go to get your PET D? Well, right here, the screen right in front of you, Mike. Contact Pro Trader Strategies, and they can contact you. But remember, what the offer we're having right now is not just simply the PET D. It's in a company with the strategy number 5, which is our best candlestick strategy. Okay. Harold is asking, how about day trading? Works great with day trading, Harold. I showed you a lot of bars. I showed you a 15-minute time frame. That happened yesterday with day trading. I've also showed you 5-minute bars, and it works in any time frame in any direction. DT asks, does it matter where the bullish engulfing pattern is occurring in relation to the 50 simple moving average? That's a great question. We teach for our beginners to always apply 50-period moving average, and that's a more conservative way in which to apply this. So if you want to get that more conservative approach, which is what we instruct in the beginning, yes, then you do want to be, if you're going long, you should be above the 50-period moving average. But once you begin to be more skilled at trading this, you can decide for yourself. Remember, we want you to be in control. We're not telling you how to trade. We're giving you the options, and you can decide for yourself. You can decide if you want to apply the 50 or not. So it's really up to you, and this is all covered in the course, okay? Let me see here. Someone is asking, what exactly is the PET D and what does this stand for? It simply stands for, the PET D stands for the Primo Early Trend Detector. And the only reason we call it Primo is because I didn't come up with this. I didn't invent this. This was given to me on the floor. But remember, when I was first learning about this on the floor, it was simply a formula that a few of us constructed on a nightly basis. What I did and why I changed it to the Primo Early Trend Detector is because I turned it personally into a color bar algorithm. So with programmers and high-speed computers, now we're able to see it. We don't have to come up with a calculation. We simply have to apply it as an add-on, and it automatically turns your bars green or red. So that's what the PET D is, and it's based off momentum. Remember, I told you it is an in-house tool, so we're not going to give away the rules. The only thing I can tell you right now, it's based off momentum. It is not based off moving averages. I know a lot of people on the internet are all saying, oh, they've got it all figured out. It's an exponential moving average, or it's a certain tool. It's a certain, he's looking at higher time frames. Trust me, no one has figured it out. And even if someone did figure out what the PET D was, if they got the formula, it really wouldn't matter, because it's not about being able to hijack the formula, because I guarantee you, even if you knew how to apply this on your own, you'd most likely lose money. What we're offering you is not simply a color bar tool. What we're offering you is nearly 40 years of instruction and mentoring on how to apply it correctly. And you don't get that by simply coming up with the formula on your own or stealing it. The way you get that mentoring is by taking our courses and becoming a student of mine. So that's really what the real secret is of the PET D. Not the formula itself, but the mentoring and the correct way in which to use it. And this is what we offer in our courses, okay? Let's see here. Let me go on to the next question. Does the PET-D work with stockcharts.com? Well, you know what? I'm sorry, I didn't go over this. Let me tell you the actual charting platforms it does work with. The PET-D as well as the up and buy indication arrows for strategy number 5. You can apply them to MT4, TradeStation, Metastock, NinjaTrader, Sierra Charts, Interactive Brokers, FCXM, and here's the only thing you have to slightly alter. It's Thinkorswim users can use the free stock data to run free NinjaTrader chart platform. In other words, because of the way Thinkorswim is set up, we're not allowed to run the PET-D on their platform. But what we can do is we can use their data on a free NinjaTrader platform. So you'll just have two chart softwares up at the same time. You can still look at Thinkorswim, but you'll also be looking at NinjaTrader whenever you want to find out what the signals are through the PET-D. And we provide this all for you for free, no extra charge if you happen to have Thinkorswim. And plus, our tech support sets this all up for you for free. It's very simple, and we do it all on our own, so you don't even have to worry about it. Okay? Let's see, Michael is asking, I still don't understand. Is this something you help us to add on to any charting software that we may have? Well, as I just said, Michael, not any charting software, but just about the major charting softwares that we do have, okay? Just time for a few more questions before we have to conclude here. Does it matter? Oh, that's the same question in terms of where we are in relation to the 50-period moving average, okay? Joe asks, do you have a scanner on how many stocks you can have it scan at a time? I have TradeStation. Well, yes, Joe, what you can do is you can put, with TradeStation, you can simply put in the scanner, or I forget the name of the tool it's called for TradeStation, the radar screen, I'm sorry. But you just put strategy number 5, and every time a strategy number 5 setup is generated, it will be in the radar screen. And then all you have to do is have the PET-D on your screen, on your chart, and you'll see, you'll go to all the stocks that have a strategy number 5 signal, and then you'll just see if it's confirmed with the PET-D, because the PET-D is already on your screen. It's that simple, okay? I do that myself, but I've been trading for so long, I don't need to really look at the scanner because I know when a signal is generated. And remember, this is what we ultimately want you to achieve. We don't just want you to say, well, okay, I have the add-on, I've plugged it into my scanner. Whenever it gives me a buy signal that's confirmed by the PET-D, I just take it blindly. I want you to understand the process behind this. This is where my mentoring comes in, because I don't want you to just blindly take signals from me or from anyone. As I said, in my 40 years of trading, the only thing that I've seen that adds to one's consistency is when they're in charge of their own trading. And when you listen to another trader in a chat room, or even if you just listen to signals that are generated on a nightly signal service, you're basically telling the market, I don't know what to do, tell me what to do. And can you imagine going into the operating room and the head surgeon saying, listen, what do you think I should do for this operation? What's your opinion? All right? Or a lawyer telling you in a case, what do you think, how should we handle this? How should we legally handle this case? What do you think? What's your opinion? No, they've studied and gone through the courses and learned enough to know exactly what their plan of attack is. And it should be no different in trading. But for some reason in trading, we're all taught, well, hey, what do you think? Tell me what to do. Because we've all turned it into gambling. We've all basically turned it into a bunch of guys sitting around the bar and saying, who do you like in the fifth? But trading is no more than gambling as being a lawyer or being a surgeon is. They're extremely, very difficult professions that you have to study and then really take the time to discipline yourself to learn the entire process, but then ultimately make your own trading decisions. This is our philosophy at Specialist Trading. We don't want you hanging around here years later and asking me, what do I think? What should I do? I give you this information, but ultimately most of our students ultimately leave and have gone on to be very successful, consistent traders. So this is what we want to instill in all of our new members, okay? As we conclude here, remember, I just want to state this is a great package for the new year. If you've been struggling, if you've already seen in the first couple of months of 2016 that you're nowhere near where you thought you'd be by now, get on board with the Candlestick combo. I really think it'll increase your odds for success, not only with that great strategy, but also with the PET-D. So now you have a very consistent strategy, and you also have a confirmation tool in the PET-D. The Pet D is a separate course that comes with a lot of different uses, and this is all explained as well. And then lastly, you have your mentor coming with nearly 40 years of experience. I'll be trading right alongside with you, step by step, all the way. So I don't think you can get this much information and this much experience for that discounted price. But you have to take action soon because the price will be going back up to roughly $3,500 again, okay? So here's the information. Contact Pro Trader Strategies. You can either email them, call them directly, or simply go up to the sign-up page, okay? Remember, this is a great way to start off the new year. We're already 2 months into the new year. If you really want to get to that level of consistency, I really strongly urge you to take advantage of this. In closing, I want to thank you so much for attending today. I really wish you the best of luck in the coming year and the coming months to follow. And most of all, I look forward to all of you becoming students of mine at Specialist Trading. Thank you so much. I shall see you next time. Bye-bye.